Alright, how's it going, guys? Welcome to another video. We're going over two options plays for next week. Now, next week, there's only two companies reporting earnings. The first one being CALM and Foods, reporting earnings December 28th after the market closes. And then we also have FCEL Energy reporting earnings the day after, December 29th. So there's only two companies reporting earnings. So we're expecting not too much volatility with a lot of stocks. It is towards the end of the year, so there could be some sell-offs, or we don't know if there might be a Santa rally. Just a lot of uncertainty right now, but I don't think the earnings are going to be too crazy. And there's a lot of good potential to play options on these stocks, even though it's just two companies. The first one is CALM and Foods. Basically, they produce and distribute fresh shell eggs to grocery stores. So it's pretty safe stock in my opinion. It doesn't move too much. It's a value stock. It does pay a dividend, but it's very, very low, 0.09%. So it's pretty much nothing, but you do get like a few pennies every single month just for holding the stock. And as you can see here, if we go to the charts for CALM, there's some strong support at this the 34 price point. So we can sell some cash here puts, and since this is a company that I don't really want to hold for the long term, I would probably do this $30 strike for $30 of premium right here. So that's about a 1% return in maybe a month. It's pretty safe, 88% chance of profit. So we got that right there. Other than that, nothing much I want to do with this stock. The next one is going to be FCEL Energy, sitting at a price point of $6.45. And as you can see, the past year, it's been pretty shaky. The stock hit highs of almost $30 per share back in early 2020. And this is a pretty good stock, especially since we're switching from gasoline to electric powered vehicles. This stock can definitely come in handy as it can help provide those basically those fuel cells, those batteries that will help power those vehicles. So we're sitting pretty low at $6.45. And if we go to FCEL on our charts right here, strong support at the $5.50 price point. It's bounced off of the support line multiple times throughout the year. So we can sell some puts to capitalize on that. We don't think it'll drop below that because then the investors will buy that back up. So we head over to the options chain, and we want to sell some puts. As we said, $5.50 is our support line, so we could do this, and that's going to be an 80% chance of profit, and we're collecting right over 2.5% in 1 week, December 31st. So that's a pretty good premium, honestly. If you want to be a safer, you could do this $5 strike. That will give you around a little over 1% return in a week, or you could even drag out the expiration date to next week, January 7th, and you can collect even more premium. A $5 strike will yield you a 2% return in 2 weeks. So that's pretty sweet. And it doesn't seem like much credit right now, only $11, but you can always sell multiple contracts. Say, sell 10 of these contracts. You're only putting down $5,000 of collateral, collecting $110 of credit. And basically, it's a win-win situation. If the stock stays above $5 by your expiration, you collect the premium in full, and the contracts expire worthless. Or if the stock drops below your strike price, you have to buy 100 shares of that stock per contract. And that's going to be a really good dip buying opportunity, in my opinion. But as we saw in our charts, $5.50 is a very strong support line right there, and I don't think it will drop below it, in my opinion. So you could sell a $5.50 strike. But if you want to be safer, you could sell under it, and you're still collecting a good amount of premium. So that's about it for this video. Very mild week for earnings next week. Two stocks that we're selling options on and collecting some premium. Nothing crazy, just some safe plays. But overall, thanks for watching and have a great holiday season.